evening, everybody. As you can see, it might still by August or late July, this market be just as blasé that we should all be out there fishing. This is the view we have when we're learning how to trade candlesticks at Keuka Lake. All right. This is the dollar chart. Everybody was saying, "Oh, the dollar is going to get stronger because of the situation in Greece." As you can see, the dollar really isn't moving around all that tremendously. And you got to remember, the situation with Greece has been going on now for months. Everybody, it's not like it's a surprise. So today's selling is not necessarily Greece. That's the excuse for the selling today. As we can see in the markets, there's just been no direction. So goes down, goes up, 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 goes down. It's not like we're in any trend. So with the market trading off 350 points today, I wouldn't be surprised if this doesn't come back up 100 points tomorrow. Just keeping us in this trading range. And the NASDAQ, that's a little bit more disconcerting because it has broken this downward trend channel with a gap down. So also need to see whether they can do a bullish harami or some sort of signal tomorrow. And the S&P, still has a possibility of, during the day, they could take these down and hit the support levels and bounce back up. But at this point, obviously, when we've been starting to add some short positions to the portfolios, because there has not been any great direction in this market. This is the Russell 2000 selling off. So it's right here on the 50. We'll have to see what type of day. Good evening, Vladimir. All right. So nothing, as we saw in the dollar. Gold, if this was a real, urgent crisis, gold would have spiked one way or the other. And as you can see, gold is just not going anywhere. I wouldn't be long or short gold at this point. The only thing I am in right now oh, that was gold. Oh, crude oil. As you can see, it's starting to roll over a little bit. So we've kind of had a doji, bearish doji sandwich today. As you can see, this little wedge is broken. Stochastic's heading down. Good possibility they could come down for a couple days and test, even one day, test these levels right here. And trying to find this is cattle. Cattle is in a very slow downtrend. Hard to trade this one up or down. And hogs looks a little bit better for a downtrend. So you can see every time it comes up here and hits the T-line, they bounce it down. Came up, hit the T-line, and almost used it again for support or resistance today. Definitely will be shorting some hogs tomorrow on weakness. Basically because we can see they can't get up above the T-line, and we're doing a few dojis. A lower open would be an indication of the direction they're going to move it after the open, number one. Number two, telling us they're moving away from this little support level. All right. Oh, let's see. I'm still long cocoa. As you can see, it's doing some J-hook patterns on the way up. All right. Now, in these type of markets, I'm pulling up ZIOP. The ZIOP closed below the T-line. If you didn't close it out, it has to open positive and trade positive. And if I saw this correctly, after hours, it was trading right back up. Oh, it's gone. It was looking like it was trading back up here in this range, up around the 1230 area. So if that's the case, definitely want to be looking at buying that one on positive trading tomorrow. So there are times when it's time to sell, not because there's anything, well, because there is something going on wrong. For example, XNet, with that strong close doji sandwich below the T-line, it was time to be out. You can always buy this back if it starts bouncing back up off the bottom of the trend channel. You just watch to see if they can get back up through the T-line. Now, things like Pep Boys, that had a strong chart, and we didn't have a sell signal today confirmed. We've got a bearish Harami potential. But this makes it very simple. If it opens lower tomorrow, you close out the position. They're probably bringing it back to test the T-line. We don't know if it's going to stay at the T-line or come all the way back down here and fill this little gap. So why take the risk? If it opens lower, you close it out. If it bounces back up off the T-line, you can always buy it back. 1239 on ZIOP. All right. Let's see where that... Was there any news? Guess I could look that up. So anyway, and this is what I'm kind of suspecting is near the close, this market was, let me take a look at the 10-minute chart. Yeah. I don't know how many points they sold off. Near the close, it looks like they were trying to support a little bit, and then they sold off at the close. And that's usually a case of the panic sellers going into the close. So with the market being down, yeah, you might have been getting some margin call situations. With the market down that big, you usually start seeing some reversal in here. So I'm just kind of watching to see how they open this tomorrow. Right now, it looks like the futures for the Dow are up about 35 points. So, but there is a difference of, this is why I was using Pep Boys. Pep Boys has the potential of a sell signal. So you don't do anything until you see that confirmed. Whereas some of the other ones that had been acting well for quite a while, like SRPT, now we've got a bearish engulfing signal and a close below the T-line. The T-line didn't act as support. So this would have been a good case of closing out this one. You can always buy it back after a J-hook type pattern, taking you back up through the T-line. So things like ICLD that looked good a couple of days ago, this is the whole purpose for using candlesticks is you buy when it looks good, you close it right back out when it doesn't look good. In this case, with it closing back below the T-line and well below the signal or pattern that told us the bulls were in control, when they close it down here below the T-line and below these signals, basically tells you the bears are still in control. You don't want to be in this position. So I'm showing this because one of the hardest things to do is try to decide to come out of a losing position. So that's why I use those very simple parameters. That if I see sell signals and a close below the T-line, I just close it out. Because otherwise, I'm sitting here hoping that it's going in this direction. And if it does go in that direction, if I've closed it out, it protects me from holding on to something like this. And I can always buy back when I know the pattern is moving in the direction that I expect it to be moving. Gimmo was another one. And this one, I was showing this today in the options room. This is why we want to let the signals tell us what's happening. Notice over here we had some indecision, but it didn't close below the T-line. Up here we had a day of, or a evening star type signal. It didn't close below the T-line. They tried to take it back up indecisively and close below the T-line. So what are we starting to see here? The fact that they couldn't get above this level, and we're starting to see sell type signals and a close below the T-line, and then they took it back up again, but closed as a bearish engulfing signal below the T-line. So whether you sold because of this signal or because of this signal, it should still all be the evaluation of what's happening up here. We're starting to see sell signals close out the position. There's nothing showing any great strength. And I say close out the position because my biggest fear always was, oh man, if they close out, what if they turn right around and head it straight back up? Boy, oh boy. Well, at least now I know if I close it here, I can find a spot that tells me this is where the bulls are back in control. I don't mind giving up whatever that would be, a point. If I'm anticipating that we're going up another 6, 7 points, what I don't want to do, obviously, is hold on to something that just gave back 3 points of my profits. Oh, let's see. Has Juno got something going on? Juno looks like after today's carnage, won't many charts show sell signals and close? Yes. Yes, but again, this is the whole reason why on these sell signals you want to get out, because it's doing two things. Number one, it's showing us sell signals. And two, with the close below the T-line, it's telling us that the trajectory that we were anticipating, which was in this direction, is not there anymore. So not to get out of these positions after sell signals is kind of goofy, because that's the whole reason for using candlesticks, is to tell us where is the selling coming in. And if it's confirming, close out the position. What's the worst case scenario? You can always buy back if it comes back up through the T-line. Stephanie, no, not necessarily going short, because for all we know, some of these are just pulling back to their first support level. We'll get to the short positions and show the difference. Dave, just I guess the example or the explanation of that is, no, there's going to be charts that are telling you they're starting to sell. There's going to be other charts. Let me see if I can get to some. They're in the. Let me go through the longs. But there's going to be other charts that. Well, this is a prime example of one that's telling us, all right, they're starting to get sell signals, but is it a time to go short? Well, there's too many things here that are working against us. First of all, we're just selling out of an uptrend, and there's a support level close by. I'd rather find something where it's been in a downtrend and trade it up, and we'll get to some of those here in a minute. So just because something is telling you it's starting to sell doesn't mean it's going to be a good short. All it means is the buyers aren't there. Well, we're looking for the ones where the strong selling is occurring, and there doesn't look like there's going to be any support for a while. Okay, I'm just going to go through now, there weren't many charts, obviously, that look good today. However, HZNP, this is where you kind of observe the obvious. The obvious is, where did they open this? Right on the 50-day moving average. Todd Roy, hello. I guess you're basking by your pool out overlooking the bay up there. Poor guy. But we've had a strong notice. This is why it's important to know what your patterns are telling you. Because notice where they opened it here and started trading it back up. Just say sun, it's okay. That's pretty much telling us that they've wiped out a lot of sellers and the bulls are still there. I would definitely, this will probably be on a recommendation list for tomorrow as a buy if it opens positive. And then we definitely don't want to see it close back below the T-line. So in this type of market, if you're going short, if you'd like to go short and you can't go short, then you can always buy a bear fund, like ERY. That's the Energy Bears. And it's broken out through a wave 1, wave 2, broken out on kind of a trend kicker signal into wave 3. So there's a lot of people say, well, I can't short because I'm trading out of my retirement accounts. You can buy the short funds. That works. I mean, essentially, you're not shorting anything. You're buying a short fund. AMED is one that also needs to be watched, because notice where they can't trade this. They can't get below this level, and it looks like a definite setup for a J-hook pattern. Let me make this smaller. The other smaller. This is our classic fry pan bottom, J-hook. And so why is this a classic, or why is this such a powerful pattern? Because look what this stock did today. Bigger. On a day when the market was about 300 points, it was still in its pattern. XNCR, another one that if it opens positive tomorrow after wiping out some of the sellers today, the uptrend is still in progress. Zoes, another J-hook pattern in progress. One of the things that we're going to be doing at the lake is going through quite a bit of not only the signals and patterns that are candlestick patterns, but observing the obvious of what patterns everybody else is watching. For example, a resistance level like this. And we can see our little rounding bottom with buy signals. And this is where we're going to get through the fear factor of a lot of people saying, oh man, it's just gapped up. I'm going to wait for it to pull back so I can get in. What we want to really be looking at is what are the probabilities that if they've just come out of a slow curve pattern and gapped up through the resistance level. Has anybody else developed an echo? Let's see. Now, Don, I think that's just a problem somewhere in the servers. So, Jim, what should he do? Can he log off and log back on? Sometimes that works and sometimes it doesn't. So, anyways, this is what we want to be identifying, especially if you're a day trader, swing trader, or an options trader. We're looking for things that give us high probabilities of moving right now. John, I think everybody experiences it. I think it's just the initiation to everybody getting an echo. So anyways, this one has a very good chart to it. This is just great, where you can't read your own handwriting. Another one, PMC. Notice the type of day, left-right combo, staying above the T-line on a day when the market's off 350 points. Control F5. All right, thank you, Don. And SREV, coming out of that fry pan bottom, J-hook type pattern. And notice what they did today. This is why we try to teach everybody the importance of the confirming indicators. This one was relatively flat, but notice what it did during the day. It used the T-line as support, came back up. How are you scanning for these J-hooks? You can either run a scan for them, or usually a J-hook is going to be based upon already a good looking chart, and or based upon the simple scan of finding the biggest percent move in the universe of stocks, not necessarily stocks that are in the oversold condition. So we'll do another scanning session here in the near future. Is there a scan that will identify stocks close to the 50-day or 200-day moving average? Yes, Mike, you can write the formulas any way you want to. And if you need somebody to write formulas, come in during the day and just ping Ed C. He's excellent at writing whatever formulas. Oh, okay, there's... The U.S. dollar did not show us anything that would tell us there was anything of any great... no. And trying to see why everybody thinks it's... Yeah, it's still in the high range. It's just the U.S. dollar isn't really doing anything of any great magnitude. And I guess it's the euro that had done the reverse. But notice what the euro has been doing. It's been moving sideways. So this always comes back to that simple statement I always make is let the charts tell you what the investor sentiment is doing, because the logic is that if there's big trouble in Europe, people should be rushing to the dollar. Well, they aren't. The other side of it is if Greece, that's the problem stepchild, moves out of the European group, that should make the euro that much stronger. But as we can see, everybody has known this, known the situation for months, weeks, days, and it's really not doing anything to the euro or the dollar. So that's already pretty much built in. Things are already built in right now. This one, PTX, I like, because notice what it's doing. It's doing that little scoop pattern. And what do we expect coming out of the scoop pattern? That slingshot effect. And where is that slingshot effect likely to move? Probably back up here to test the 200. And if it breaks the 200, fill in this gap up here. Now look again, look what happened on that little wedge. When they finally broke it down, and we could tell they were breaking it down because every time they came to the top of the wedge, we saw a sell signal, a shooting star, bearish engulfing signal. When they broke this level, it told us we stay short until we see a buy signal to close back up above the T-line. So this is the type of thing that everybody should get their eyes acclimated to, is the patterns, and then what are the signals, the candlestick signals telling us which way those patterns are going to perform. On the short side, what we're essentially looking for is the sell signals that can put us into situations like this. And that's all a function of going through the process of identifying which way the market indexes are moving, and then deciding which weight you want to have in your portfolio. And when I say weight in your portfolio, I'm still basing it on just kind of a very simple math allocation, that if you've got a portfolio of X number of dollars, you may have 10 equal positions. And so there's going to be times in the market when you're long 8, short 2. There's going to be other times in the market where you're long 5, short 5, and other times when you're short 8 and long 2. So if we could see that the market was starting to roll over, and we can find situations like this where they've just broken this wedge, that means there's possibility of a lot more downside. Let's see. What did I just do there? MGI. Bye. There's your morning star. There's your evening star. There's your support level. There's your doji sandwich. There's your stochastics. Telling us if they open this lower and they're breaking this support level, where do you think the next target is? At least down here to fill the gap, which would get you pretty close to the 200-day moving average. And we started shorting INFI the other day because this is where you observe the obvious. The obvious is there's a trend channel right here, and every time they got back up to that top of that trend channel, we can see there was indecisive trading and it closed back below the T-line. So where did that make our next target? Somewhere down near the bottom of the trend channel, which in this case I'm kind of projecting is right down about the 920 area. But again, this is not anything more than, right now we can see visually that they're selling this one off. And every time they try to pop it up and bang it back down, it means they're selling it off some more. Now, how long will that last? Who knows? But at least we know that we want to be short on something where the probabilities are in our favor, but they're still trading it down. SIGM, we recommended this one today on weakness. And notice what it did. It did a doji, came up, used the T-line as resistance. Makes this very simple. Which way is it going to move? It's going to move in the direction how they open this one tomorrow. So if they open it lower, you can start shorting this because what kind of a signal can we anticipate? A bearish doji sandwich after all the sell signals up here. Your long-legged doji, your kind of your left-right combo, doji, bearish engulfing, and now a potential of a doji sandwich. Where's your target? Well, there's a gap down here right about the 50. So you can calculate what your rate of return would be based upon that being the target. Let's see, LDRH. This is a very good signal. What it told you today was they tried to take this up and took it right back down again, doing a doji. Stochastics not in the oversold area yet. They're getting there. But this makes it very simple. If they open this lower, where do you think your next target is? Well, if we can calculate that that was the first half of a doji sandwich, second half being approximately the same means let's start watching to see about taking profits on the short side right at the 50-day moving average. OFG, where did this fail? Right here at the 50-day moving average. What type of pattern is it telling us? Wave 1, wave 2, looking for wave 3 to probably come back down to the bottom of this trend channel, down about 25% or so. AMBC. Where did this one fail? Right smack dab at the 200, closed below the 50, closed below the T-line. Made it very simple. They were going to move it in the direction how they open it. Now today it was an easy time to go short on this one. Because if we knew that they were opening lower, doing a doji sandwich about that same magnitude, what did that tell us about this support level? They weren't holding that support. The fact that they gapped it down, what did that tell us about this support level? That if they didn't immediately start bringing this back up and closing above the T-line, then this support level wasn't acting as support anymore. You should have a good downside. Shouldn't say a good downside. Have the probabilities that you're heading down. Now, when they opened it lower today, when we woke up and the pre-market futures were down 180 points, that was a pretty good indication that there weren't any buyers in this market right now. That when you add all that together, once again, the probabilities of being in the right place at the right time is dramatically in your favor. A doji sandwich is when they have a big down day and then you have a doji. And nothing is occurring as far as telling you that the stochastics are curling back up or they're in the oversold condition. So we know there's a simple rule of the doji, which is that it's going to move in the direction how they open it. So if they open it lower, we know they're going to move it in that direction. And if we know that this was a big bearish day, a doji, and they open it lower, the probabilities are pretty strong that this candle right here will be at least the same magnitude as this candle right here. Thus, if we can identify that's the potential down move, means if they open it lower and they could close it down that same magnitude, that pretty much told us that this area is not acting as support. We're now in wave 3. So your doji sandwich is a big move, a doji, big move. The doji being the doji being the sandwiched in between the two of them. Yes, another good example of wave 3 being confirmed. Big day, doji, another big day to the downside. It's just a very high probability trade setup. So even if you're a day trader, that you can usually see which ones are setting up for that big potential the next day of a big move. I'm kind of anticipating that in SIGM. If this market opens lower, that this candle right here and this candle right here will be the same, and that's pretty much confirming that we're probably heading toward the 50-day moving average. Another thing that we can assume from the doji sandwich is that there is going to be more move in that direction. Oops, we did that one. So this is the type of setup you like to get stuck in. So when you start seeing that doji sandwich close below the T-line, at least we knew where our first potential target was. Back to the 200-day moving average. We can always see what it does there. And it also puts you into positions where you have the probabilities of having these type of moves. I make a lot of my big money not by the moving in my direction, but seeing a setup to when they start popping it, it moves very quickly and very, very far. This is CMCM. Notice how it kind of broke through this resistance level with a doji gap down, our best friend on the bearish side. And now there's really no telling where they'll take this down, because what does investor sentiment do? The more it moves, the more panic selling comes in. So we look for those big blow-off days where everybody's just bailing out of a stock position and or the market in general. Then it starts turning back up. And even though most people, and that's why those big reversal days occur, because most people get panicky and they sell. I say most people because that was me for many years prior to candlesticks coming along. You just can't stand the pain, and you got all. And then 3 days later, I'm always looking back and saying, what the heck? How come I was panic selling down there? And as soon as I sold, it turned right around and started heading back up. Well, now I can start looking at the fact that when everybody's panic selling, who do you think is buying? It's usually the smart money that's buying at the bottom and selling at the top. So now at least we can turn our investment strategy around 180 degrees and be part of that smart money that can identify when the panic selling has occurred. There's your kicker type signal on WETF, Wisdom Tree. I would suspect there would be more downside on this one. Obviously, you watch to see what it does at the first support level, potential support level. But again, when I say you watch to see, you just very simply see what type of signal happens. Does it bounce up off of there and do a hammer? Maxwell had a good potential setup. Todd, that's right. Unfortunately, the only flaw to that program is that if you've gotten into something and it's killing you, when so many times I'd look back and say, why didn't I sell up here when I saw the sell signal? It doesn't take very long for you to start registering in your head saying, why didn't you sell up here? Because that was your sell signal. That I don't have to double up down here. Now I can start buying down here someplace instead of doubling up on a bad position. And that was always one of my big hang-ups, was selling out, because you hate selling out, because what would happen if they turned it right around, and you hate to take a loss. Well, I've discovered now I can sell it with a very non-emotional decision and buy back when it's time to buy back. NHTR looked like a good-looking chart until we got hit with a bearish engulfing, and now the close below the T-line. Where's the next likely target? It could come back to this support level, which would be the same as there. Okay, Galen. What did I just do? NHTR, okay. Showing this one because whenever you get smashed like this, people say, all right, I'm going to start buying. Well, if you see a hammer signal and the next day they're still trading it down, I just told you that on that day when the bulls tried to take it back up, they failed. The bears are still in control. And this is a case where you don't buy this until you see a confirmed buy signal. So just pointing this one out because anytime you see that hammer type signal and the next day they're trading back down into the tail of that hammer, that means they didn't reverse it. That was just bullish anticipation, or maybe even short covering on a downtrending stock. Whoops. An ARP, this one, observe the obvious, which is you've got this slow curve, and now you have a doji gap down. There's no telling where they could take this one. And you can see which direction it's been heading in. So I guess there is telling where they could take this one. If you draw a line right down through here, they could be coming down into this area. Whoops. I don't know who wrote these symbols tonight. Just terrible handwriting. Anytime you see that belt hold signal, bearish belt hold, now what do you have? You have a doji gap down. Very high probability they're coming back to here, possibly here. But this was a warning. And then this was a confirmation that the sellers are now in control. Jazz, no, I don't pay attention to volume unless on the day that a reversal has occurred, you've got huge volume. It's usually telling you the panicky or the exuberant have either sold into the smart money or they have bought into the smart money at the top. So volume doesn't really mean anything. It's just it acts as an added fluff on a big reversal day. But there's been a lot of stock changing hands, and it's usually from the panic sellers into the smart money. This one we can observe the obvious, which is it's in a downtrend. Now what do we have? We got kind of that bearish scoop pattern that could give us a good strong slingshot effect to the downside. That's on LRN. Where's the next potential target? Down here to test the lows, especially if they can slingshot it out through that support level. And Kiwi looked good, but this is the exact reason why on a chart that looks like it has potential, on a day like today, you want to close it out, because not only did that tell us that the uptrend was over, but there's no enthusiasm there anymore. The worst case scenario is they take it right back up tomorrow. You can always buy it back. But the probabilities at this point say they're taking it down. Where? More than likely at least to the 200. Then you have to see if they're going to support there, which may take 2, 3, 4, or 5 days, or if they're still heading on down. Why risk it? When the chart doesn't look good anymore, close it out. Another way to look at it is if your account is worth X on the close, it's still going to be worth X whether you hold this or close it. The advantage of closing something like this is you still now got X in your account, but it's mostly it's heavier in cash versus a position that doesn't look like it has good upside potential, that it still has more downside. So once you have gone to cash, your value of your account hasn't changed, but you have cash now to at least improve the probabilities of moving on to something that you can see that is moving in the direction that you were expecting it to. And Pixelworks, this is why when they close below the T-line, you want to close out the position, because the probabilities are strong that if you see a candlestick sell signal and a close below the T-line, the probabilities are against you. Number one, if you cut this chart off right there, if you were buying this based on this chart looking like it was going to do a J-hook pattern, well, Shazam, what is that? And it closes back down here. If you're like me, it's just hard to say, man, I just bought this because it looked good. I can't close this one back out because it's going the wrong way. I can't close it out because my ego or my intellect said it was going in this direction. Maybe I'll give it one more day. Unfortunately, the signals tell you exactly what's going on in investor sentiment. Again, I have no qualms about buying here and closing it right back out, because when I bought it here, I had expectations. And when it does a bearish left-right combo, it eliminates those expectations. So this is all a process of not only identifying the signals and the patterns, but also having the emotional discipline to do what the charts are telling you. Because that's the whole point of using the candlesticks, is basically it's telling you what's going on in investor sentiment. And when it tells you that it's not a good sentiment anymore, most people fall in love with their positions versus looking at the position and say, is this something that I should be owning anymore? Because the trajectory's gone, it's closed below the T-line. I thought it was going in this direction, had it opened positive and started trading positive today, but they've reversed it on me. That tells me that's not what I want to be in anymore. Close out the position. And I say that kind of not with a little bit of ease, because, again, if I put on this position and it closed back here, I'd rather be getting out with a small loss than holding on to something that's going to create a much bigger loss. Because what happens when you hold on to something too long? You now start saying, well, I can't sell it down here because I'm down so far. Maybe it will pop up and give me some back. So now you've changed your whole reason for owning that position, where one, you were buying based on a good chart pattern. Now it's because you own the position and you're hoping that you can get some of that losses back, instead of looking at that chart at that point and saying, is this something I want to be in anymore? And saying, nope, close out the position. Because I can guarantee you that if you closed out this position right here after buying it up here and you had a small loss, you won't even remember 2 days from now. You probably won't even remember tomorrow, because you're looking at charts that are now in the process of making you money versus holding on to something that you've got to figure out what to do with. I don't care about short interest levels, because we're not buying short interest levels. We're buying what's going on in investor sentiment right now. Everything else is just already information that's built into the price of that stock. So a big short interest doesn't mean a hill of beans to me. I'm more interested in what's actually happening in the price of the stock. On a trade like that, you don't own the position. That's true too, yes. You're now, and that's That's because the chart isn't your primary factor. It's your own emotions. And that's, once I got rid of my emotions out of my trading, my income just started growing astronomically. Because, as I say, I don't mind taking lots of small losses. It's the big losses that really start chipping at your account. And once you take that big loss, what do you have to do? You've got to think about how you get a big gain to get back to even. Whereas if you're taking small losses, all it takes is one big move, and you've wiped out 3, 5, 7, 10 small losses, and then hopefully you've got another big move. And I say hopefully, it's because each time I put on a trade, I know I'm going to be in the right position at the right time with a high degree of probability. All tech traders will see closing below the T-line and sell off. Absolutely not. You got to remember, there are very, very, very few people using the T-line. I would say the percentage of people is so minuscule. Out there, remember, there's other people out there using Fibonacci's, using the 50-day moving average as their primary, the 20, the 100, the 10 simple. Very, very few people use the 8 exponential moving average, which tells us some important information. One, that when the price moves back to the T-line, it's not because everybody has it on their charts and watching it and is acting like a magnet to that level. And because nobody has it on their charts, it's more like a natural support and resistance level. And that's where this becomes a very powerful process, that if you see investor sentiment in the candlestick signals and it's staying above the natural support and resistance level of human nature, you've got a very strong combination of being in the right trade at the right time. Okay, with that, any other questions on candlestick signals? And this is the type of thing we go into a lot deeper on these private training sessions, where we can spend quite a bit of time, not only at the in front of the screen, but we have these kind of conversations at dinner or lunch, so that it's not that you're sitting in the front of the screen and then we go off and do something and the conversation ends on investing. Usually the conversation about investing is a constant thing during the whole 3-day session. I don't use that specifically. The question Ralph is asking is, are you using the 3T line crossing the 8T for your buy and sell signal? No, that's just kind of a confirming indicator. That is an added indicator that if you do see a sell signal and that close below the T line with the 3T line, that's much more confirmation that there has been a reversal. If a lot of positions are below the T line, should close out or see if they open positive tomorrow. Yes, there's a lot of positions that are closing below the T line today. And the true fact is, on something like Zyop, should have been closed out today. All of a sudden it's trading up here. The probabilities say close it out. If it opens positive tomorrow, you can always buy it back. But the probabilities at this point, with it closing down here after trying to trade up today, told us that's the likely target. But that target changes when we see there's a change of investor sentiment taking it right back up again. Let's see. In a strong up market, whoops, scrolled past me. In a strong up market, do you still buy under the 200? Yes. Howard, we're not buying the moving averages. We're buying the signals. So there'll be a lot of times, let's see, I don't know if this is a good example of it. Oh, I'm just going to pick out something that might. No, Matt said, no. Again, I'm buying based on the signal and the T-line. The moving averages to me are just kind of confirming indicators to see if they're going to act as resistance or support, depending on where the trend is. MX, long-legged doji, strong a week. MX was kind of holding up pretty well in today's trading. So even though it's a long-legged doji, remember, it's not a long-legged doji at the top because our stochastics are still down in the mid-range. This basically was telling me that even with the market off 200 or 350 points, that they were still buying this after the close. So even though it's a long-legged doji, I'd be more inclined to say, all right, if they open this positive tomorrow, I can still be a buyer, let alone holding a position. If they open it lower tomorrow, below the T-line, that tells me, all right, this is a failure up here. It's time to get out. Does the doji and a doji sandwich have to be below or above the first candle, or can it work when the doji is within the body of the first candle? Is there a difference in the magnitude? Usually you want to see the doji. Let me see if I can find a doji sandwich somewhere. Usually you want to see the doji somewhere close to the close of the first day. I mean, if it opens way down mid-range, now that doesn't become a doji sandwich. It just kind of becomes a doji harami. But the doji sandwich is usually going to occur with the doji right near the previous day's close, flat or slightly positive, or slightly negative. And again, that's all kind of a additional confirmation if we can see that the stochastics are moving up. I don't think there's a difference in magnitude because the magnitude of the third candle is still going to be equivalent to the first candle. It seems easier to short stocks in this market than long. Definitely, and that's exactly why the first thing that we do before we start any scans is say, which way is our market moving? In this case, where we could see over the last 3 days the market was starting to pull off or pull back, there was our evening star signal. Where did it occur? Right about the resistance level where prices stopped before. And notice where we closed, back below the T-line. So that's where you start looking for the sell signals. We'll try to get, some of these don't necessarily require shorting because you can see type of things. Now, if this did open weaker tomorrow, doing a doji sandwich, telling me this level wasn't going to act as support, yes, then I start saying, all right, where's my next support level? Down here in this range. You have recorded and explained the J-hook pattern? Yes. Yeah, there's different training packages in the members area. We've got the 12 major signal package. We got the patterns package, as well as stop loss strategies, scanning techniques. Those are the ones I can think of off the top of my head. Oh, gaps at the bottom, gaps at the top, trend analysis. These are all things that are just common sense put into a graphic depiction. And when you all start getting molded together, you start seeing much more clearly which direction things are moving based upon all those indicators put together. Let's see. Crude oil. Yeah, crude oil had kind of a doji sandwich. So when it opened lower today after the downward move and especially the gap down today, what did it tell us about our wedge formation? They've broken out of the wedge formation. Oh, that's, yeah, you don't necessarily, didn't didn't necessarily mean that HZNP ran out of buyers. Just told you that they were buying all day long, and maybe during the last few hours with the market selling off, they weren't coming in aggressively anymore. At one point, yeah, Rich, that's true. Greece has the same economy equivalent to Rhode Island. So the ramification, though, is if that link breaks out of the euro market, what about the next one and the next one? That becomes very much, makes that whole euro market much weaker. The other problem that has to be considered is if somebody doesn't help Greece, which is kind of their leverage, as far as the Western nations, now you have the opportunity of Russia or China coming in, helping them out, and now they can establish a base there in Europe, so they're right on top of everything. So that's kind of the political fallout of all that. I'll get to individual stocks in a minute. When determining trend, do you use the T-line on the daily chart, above, long, sell below, even if it's broken the T-line for 3 or 4 days? Do you use the T-line on the daily chart, above, long, below, sell, even if it's broken the T-line for 3 or 4 days? Oh, I don't understand the question, but yes, I do use the T-line to assess what the overall market is doing. Now, somebody asked not too long ago, well, what about a market that keeps bobbing up and down below the T-line? How do you trade that? And the answer is you don't try to trade that. That's exactly what the market is telling you, is that there's no direction to it. So it's not that we're trying to trade the market based upon what it is. First of all, we're trying to assess the market to say, all right, what's it doing, and then make our trading program in correlation to what the market's doing. Obviously, that type of market tells us that we want to be long, or something like this. This type of market tells us, shoot, if I'm going to be in anything, I'm going to be in as many longs or as many shorts as each other, because I really don't know which way this market's going. Are you trading the investor opinion effects of the effect? You are trading the investor opinion effects of an effect. Brexit is the potential effect. Don, you got me there. Okay, all right, with that, Jim, let's go ahead and do the double line. And in 5.1 seconds, let's do the second double line. All right. Whoops, what did I just do? That's not good. Hold on, it says we've lost connections here. Let me see if I can get anything. Well, that ain't a fine howdy do. We got to give it a minute. There we go. All right. Apple, you can see that it broke the bottom of this wedge. Right now, you want to stay short. Let me see if I can get some of these others up. XCM. Oops, we're going to have to make this bigger. So this one, I probably wouldn't be long or short until it breaks out of something like the 50. As you can see, it's just moving sideways. We did HZNP. That one we can be buying on positive trading tomorrow. SanDisk. Stay short on this one. Notice the slow curve breakdown through the support level here. Just stay short. Ryden, that's a good looking chart. Elizabeth Arden. Notice the kind of the doji sandwich, but your fry pan bottom, scoopy type pattern. I would suspect your next target is up here at the 200-day moving average. Ness might be in the bobble. I would definitely be buying this one on positive trading, telling you the 200-day moving average is not acting as resistance anymore. But you can see how that slow curve has now broken out. Now it has to see whether the 200 will get out of the way. ACAD, right now you should be out of this, but I don't know whether I'd go short because you're still in this trend channel. I would suspect it's going to support on the 50. So I wouldn't be in it right now after today closing below here, but I wouldn't be shorting it. Lilly had a good chart up until today because it had the potential of breaking out. It hasn't. So there's only one thing you can do with Lilly. It has to open positive and trade positive tomorrow to stay in it. If it opens lower, it tells you hit a double top. ISIS, you stay short on this one. You had that doji sandwich, closed right on the 200. Told you very simply, if they were going to support it, that's where they were going to support it. Notice what they did today. They even came back up to see if they could get through the 200, and the 200 was acting as resistance. Now you stay short until you see a buy signal. Bob Evans, this is a case where if you've got a nice steady uptrend, but your stochastics are in the overbought area, you had a doji sandwich, so you should be expecting more upside. But your worst case scenario is if it came back through the open of the previous day in the overbought condition, close out the position, because that tells you there's some selling, more strength selling than what you want to see in an uptrend, and that likely it was coming back to test the T-line. Nike, all you can do right now is stay long on this one, as long as it doesn't close below the T-line. ARD or ALDR, that's a toughie right now. It's a left-right combo. You can buy this on positive trading tomorrow, but be ready to close it right back out if it closes back below the T-line, because if it does, it tells you there's no trajectory to it. Boeing, you stay short, especially if it opens lower tomorrow. ADXS, there hasn't been anything here to be real excited about ever since the hammer or the hanging man bearish engulfing signal. They have not been able to get this back up above the T-line. We're right now sitting at the support level. You're in the oversold area. If I was short this, very simple. I'd put my buy stop at today's high. It shouldn't come back up through that level. If it does, just tell me they're probably bouncing it back up to the T-line again. The pro short on the, or the ultra short on, or I'm sorry, the leveraged funds on the S&P. Now you have to see whether it's going to support here at the 200. XBI. This one you want to stay short until you see a buy signal. We did Apple. Let's see, Ryland Homes. This one closing below the T-line, you should have closed it out. If you didn't, there's only one thing you can do with this one tomorrow. It has to open positive and trade positive. If it opens positive, you still put your stop at today's open, because if it opens positive and starts trading back down, that means they're still selling it off. DYAX, YAX. Opened lower and traded back up. But it didn't get back up above the T-line. So if you held this long, it has to open positive and trade positive. If it opens lower and starts trading down, you close it out because it's telling you that it's not coming back up through the T-line, and it's telling you that this trajectory is now sideways instead of up. WSTL, this is exactly why you want to, on a bullish signal, you want to see bullish confirmation the next day. This was not bullish confirmation. If you happen to buy it there, the only way to stay in it now is to see it come back up tomorrow through today's open, telling you the profit taking was over. But if it opens lower and starts trading down, close it out, because that means there's still no direction to it. CELG, this one you should have closed out today. Here's a perfect example where they opened it and they tried to take it back up and then failed. So where are you now? You're back into this trend channel, more than likely coming back to the 200-day moving average. Amazon got clobbered today, which means it's probably coming back to the 50-day moving average. It has to stay above the 50 to stay in this one. MTSI should have been closed out yesterday on the bearish engulfing signal. After a bearish engulfing signal, it definitely should have been closed out on lower open today. I wouldn't be looking at it again until it hits the 50 and see as it bounces up from there. Hubs looks for a bearish doji sandwich, which means it could possibly get through the support of the 50. And SWKS, if this opens lower tomorrow, definitely want to be short on this one. SKX, Skechers, notice what it did today. Tried to come up and then failed. This is very easy. If it opens weaker tomorrow, you want to be shorting this. That is rocket science. All right. Blackstone, stay short. I haven't been able to get this up above the T-line after the failure at the blue ice failure, making the 200-day moving average your potential target. VLTC, nothing here. I don't know whether you can short this one, but you don't want to be in this one. There's no direction to it. VXX, the short S&P, you can stay long on this one. I would, if I was long, with the doji gap up, you stay long until you see a sell signal. And QIHU, another one where you stay short until you see a close above the T-line. You could be shorting this one if it opens weaker tomorrow. That tells you this was not any signal today. This was just kind of a, what do I say, profit taking of the short positions. Now JPC, that's a good looking chart. You just stay long ever since you got this kind of morning star signal, kicker type signal, and you're trying to break out through this level, you just stay long. Oops, I did that. Oh, no, I didn't. Oh, that was SYY. I wouldn't be long or short this one. There's no direction. AKBA. You can stay long, but you notice you had a doji that just touched on the T-line today. Your stochastics have gone flat. So this tells you one thing. It has to open positive tomorrow to stay in it. And RGEN was a good-looking chart. It was getting a little bit soggy today. It has to stay above the T-line to stay long. Okay. I guess we'll call it a night after a bad day in the market for the bulls. But this is why you always want to, in these type of market conditions, Always want to have shorts on as well as longs. So, with that, everybody have a good evening. We will see you in the chat rooms. The people that are still interested in coming to the lake, email me. I'll be glad to answer questions. Somebody had asked today. Yes, there is financing, but if you need to pay over 2 or 3 payments, there's no problem with that. And all the food is free, so bring your bathing suit, your flip-flops, and your laptop. We'll see you later.